Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Paris Rapeseed. The market's rise until January started in August 2024 from the support of the slowly rising long moving average, currently at 494.5, and the 50% absolute Fibonacci line, which is at 445.5. This move higher did not happen all at once, but during most of August and into the first half of September. In the process, prices formed a not very pretty looking reverse head and shoulders pattern, with a fairly flat neckline, which is currently at 478.25, highlighted in bright green on my daily chart. It's now coming back into the frame just underneath the recent changeover move gap lower that we've seen. Now, 21 weeks ago, prices broke higher over this neckline and the last of the moving averages, reaching both the primary and secondary topside targets, the reverse head and shoulder pattern soon after. Whilst in the process, the market created a mid-August based expanding wedge pattern that soon morphed into a bull channel, saw prices run up within this pattern until mid-November, where they peaked at the March 2023 high at 540.75. The turn lower was quite dramatic, with a gapping move lower and a drop to finally be by the rising medium moving average, currently at 511 even. The subsequent recovery higher stopped short of the previous November 2024 high, peaking in early December 2024. And the following pullback lower was also not to the extent of the earlier late November fall, thus giving some ammunition for a fresh attempt higher. Though in reality, whilst we made new higher prices, the closes did not match the move, closing once again below the March 20 consecutively closes below the March 23 high at 540.75. All this action brought to my mind again my comments from 8 weeks ago when I said, and I quote, "All this raises the question as to whether the action since mid-September, especially since mid-November, is a double top in formation or a bullish halfway hesitation." End of quote. Well, after the peak in January, it turned out to be neither of these scenarios, but instead a triple top, with the January high itself being a horn top. Last week, prices were held up by the mauve medium moving average, but with changeover, we have a big gap lower. That's currently at 492 to 509.75. Not the largest gap lower I've seen here on this commodity, but useful enough such that prices opened this past Monday below the long moving average, currently at 494.5, and even below two important supports: significant dark blue February 2024 today uptrend, currently at 486.25, and the purple neckline extension, currently at 483.25 of the April to August 2024 head and shoulders top, plus just above the previously mentioned bright green neckline extension. Since then, prices have recovered and tried to fill in the large gap overhead, but have been capped right now by some previous congestion at 491.75, and I suppose also by the long moving average that's overhead up, currently at 494.5. We also have further congestion at the July 2021 low at 497.5, then at 501 even, 504.75, and 506 even, before the gap can be filled. However, whilst there might be pressure to fill the changeover gap topside, there's also bearish pressure emerging and likely engaging with the market, notably what we have finally constructed between October 2024 to February 2025, and that is a triple top. This pattern, though not a very pretty one, does give us some potential targets below, of a primary target X down at 480 even, and a secondary hard to reach target X1 down at 458 even. Now, the move lower this week down to 481.75 just about reached the primary target X down at 480 even. Enough that I'm considering retiring it, but for now I'll still keep it open, as the competing forces of gap filling and triple top really do compete with each other. Winnipeg Canola. Between late July to late October, the market created a reverse head and shoulders pattern. 13 weeks ago, I said about this pattern, and I quote, "Waiting in the wings should the neckline be properly broken, at which time I will likely lay out some fresh targets for this new, currently potential reverse head and shoulders pattern." End of quote. Well, we tested the neckline, which is currently at 694.40, throughout late October and early to mid-November, until the patience with those who saw this pattern and were waiting for a break higher, well, they finally dried up, and the market turned and broke down through the key gold highlighted flatlining long moving average, currently 629.80, triggering a big move lower all the way down to the lows of late November 2024, seen also in February and August 2024 between 571.90 to 575 even, with the ultimate outcome of a monthly key reversal down for November. However, the market did not follow on lower following this pattern, no doubt supported and buoyed by the congestion we saw in February, August and September last year, and back in November and December 2020 at 575 even, 571.80, and the December 2020 low at 567 even. Since then, prices started a 3 steps up and 2 steps down action, gradually moving higher for a while, halted by the gold long moving average and then breaking higher in mid-January, and this week utilizing the gold long moving average amongst others as a support for a further move higher still. This action's left us with 3 significant features on this market, one of which I've previously mentioned, and one that's coming to a cusp also. This week, 7 weeks ago, well, that's coming to a cusp this week. 7 weeks ago, I said the following, and I quote, "The newly drawn bright red middle time, currently at 647.5, of the bullish shift pitchfork for the same move as the dark blue bullish Andrews pitchfork," end of quote. This bullish shift pitchfork is for the mid-September to late November 2024 move. Plus, I have now highlighted it in dark blue other than red. Otherwise, it is still all relevant, as the market is seemingly closely associated with the middle time. The second feature to note is that since mid-December last year, the market has started to form what looks like an ascending wedge pattern, currently 633.80 to 670.10. I've highlighted the lower tine in bright green as it is a 3-pointer, but the upper tine is only a 2-pointer at this time, though together they do add up to enough touches to be a legitimate ascending wedge pattern. Finally, and the feature that's coming up to a cusp this week, is that we are up to form a weekly key reversal this week. Thus, if tomorrow, Friday, prices close either over 647.60 or under 645.20, then we'd be on. Anything in between will have the lesser outside weak pattern. Right now we are looking at a weekly key reversal up. Bursa Malaysia crude palm oil. I said here 17 weeks ago, and I quote, "Of all the oilseeds and veg oils, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April." This is still relevant. And that's the end of the quote, sorry. Okay, so the first of these patterns was the broken upper tine, currently at 36.14 of the old August to November 2022 bearish shift pitchfork. I know that it is way lower, well below the bottom of the current market, but the upper tine had acted in the past as a declining support, so I suggest keeping an eye on it, and a thought just in the back of my mind, just in case. The second pattern is the bright red neckline, currently at 43.99 of the September to November 2023 reverse head and shoulders pattern, which I've highlighted repeatedly, which even now is affecting the market, acting as a support today. Additionally, and this one I also added last time, and many times previously, is the neckline, currently at 44.43 of the September 2015 to November 2017 head and shoulders top. I have not been sure about this one in the past, but is an old one, a super old one, that had been way below the current market, but is now significant. The third pattern here is the flatlining gold long moving average, currently at 42.54. That stopped the market fall dead in mid-January and has truly acted as a base for the rise in prices we have seen since. Now, there are other features to watch out for, and to start with, I'd look to how the market is currently wading through a congestion zone between 44.08 to 45.59, possibly as high right now as the mauve medium moving average overhead, currently at 42.54. Within this congestion zone, we have the old March 2008 previous all-time high at 44.84, as well as the April 2024 high at 45.27 and the June 22 low at 45.59. I suspect the slowly rising mauve medium moving average may well be the one to watch. Finally, I have outlined a mid-August 2024 to mid-January 2025 bullish Andrews pitchfork. This is an unhighlighted pattern as it is very much a nascent pattern, only being 3 weeks old, but I think it is worth considering. However, I would finesse or morph it in a heartbeat to a shallower bullish shift pitchfork or even retire it completely if I thought it appropriate.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.